We all rely on farmers and ranchers, but farming is riskier than other businesses out there. Crop insurance helps farmers manage their risk. With crop insurance, farmers put skin in the game by paying premiums and shouldering deductibles. That keeps taxpayers from having to pick up the whole bill every time disaster strikes. Today, about 90% of U.S. farmland is insured, providing $100 billion in protection to more than 130 different kinds of crops. It's a testament to the program's success.
Thank you for joining us for our Agri-Pulse Washington Week in Review. I'm Spencer Chase, joined as always by Agri-Pulse's Phil Brasher, as well as this week by Paul Neiffer with CliftonLarsonAllen. And Paul, we appreciate you joining us.
You're welcome. I enjoy talking about taxes.
Who doesn't really, and especially when it's such a hot topic in Washington and across the country as farmers look to learn a little bit more about the Biden administration's policy goals and what that might mean for the tax implications on their operations. And Paul, we saw this week a little bit more clarification from the administration in terms of things on stepped up basis and some other taxes related to inheritance. So I guess just to kind of frame up that conversation, we've heard for years about estate taxes. We saw some tweaks in the 2017 tax law, all kinds of fun stuff on that front. But this appears to be a different approach, different policy than the estate tax that we might be more familiar with. Can you just kind of walk us through the differences there?
Yeah, and we knew this was coming. I think it's been bandied about for the last few years, but certainly with this administration, they want to eliminate the step up in basis for wealthier clients. Now, they've touted that it's not going to affect farmers, but we'll talk about that in a second, that it definitely is going to affect farmers. So under current law, when somebody passes away, let's say that the farmer owns some grain and it's worth $2 million, the heirs get to step that cost basis on that grain up to $2 million, and they can sell it tax-free for $2 million. Well, under the Biden plan that came out here on Wednesday, the farmer likely would not be able, the heirs couldn't step it up, so they would owe income tax on that $2 million sale if and when that happens. So essentially, we've told farmers or other taxpayers, we want you to hold assets until you pass away because your heirs are going to get a step up in basis. Well, under this plan, probably our planning may almost switch 180 degrees. Maybe we want you to sell assets during lifetime or transfer assets, get that step up in basis during lifetime because you're going to lose it potentially when you pass away.
Now, Paul, the administration has talked about this, keeps saying this won't affect farms, certainly farms that stay in operation. The USDA came out this week as the president actually, about the time he was speaking to Congress, and said this would only affect 2% of farms. And again, they're emphasizing that this won't affect farms as long as they stay in operation. They won't have to pay any tax when the parents die and the kids get the farm. You have written that you think a lot of those 98% of farms actually will be affected. Talk about that. How does this affect them?
Yeah, well, and I think part of it, we got to understand USDA, their definition of farms includes the farm with 1 acre all the way up to the farm with 100,000 acres. And if we're talking more what I call the traditional farm operation, where the person, their livelihood is based on farming. A lot of these other farms, they have off-farm income, such as myself. I have off-farm income and I have a farm. I'm one of those farmers. So for what I call the traditional farmer, almost all of them are going to be affected by this. And what they say, hey, as long as the farm remains in the farm operation, well, we know eventually most of those farm operations, they continue to get bigger. And so some of those farm families, they're going to end up selling their assets. Well, what the administration doesn't tout is the fact that there's a recapture tax likely. Now, is it 10 years? Is it 20 years? Is it 30 years? So all that deferred tax, you still have to calculate that tax when somebody passes away. All that deferred tax is going to be owed back to Uncle Sam plus interest. So if it's a 10 or 20 year period, the heirs may end up owing as much tax as the land or the assets were originally worth when the person passed away. Also, what the administration doesn't really explain is the fact that the farmer now, the heirs, lose the income tax benefits. So with step up, we get an income tax benefit. If the step up isn't there, if it's deferred because it's being farmed in the family, the heirs are not going to get the income tax benefits that they're used to now. It's been around since what, the 1920s. So this has been around for 100 years. So this is definitely a dramatic change in how income taxation is going to happen for farm families if it goes through in the proposal. And again, Phil, the proposal was about 3 lines, but if you read between the lines, it's basically the step back. We already know what the step back says, and that's really what's going to happen.
Paul, you're talking about the STEP Act, a proposal that was introduced by some Senate Democrats back in March. Essentially, what we're talking about here is taxing all capital gains when someone dies.
I don't even want to call it a capital gains tax. It's a transfer tax. So what's going to happen if you have ordinary income, it's going to be taxed ordinary income rates. If you have capital gains rates, it'll be at capital gains rates. But then we also see Biden administration wants to eliminate the ability to have capital gains taxed at a lower rate if you're over $1 million. Now, we do have to realize that a farm family, a husband and a wife, or a spouse and a spouse, each are going to get $1 million exemption. But what they don't really tell you is if the step back comes in, if you want to transfer assets during lifetime, it's $100,000 exemption. Now, it sounds like they're eliminating that proposal. They're going to keep it unified. I think I've heard that come out here in the last couple of days. So yes, there'll be some step up. And actually, we shouldn't even use the word eliminate step up. You're going to get step up. If you pay a transfer tax, you get a step up. The issue is you have to pay a tax to get the step up. Under the current law, you don't have to pay the tax.
Let's get a look at some more real world scenario. You've let's say the exemption that they're talking about is for families that keep the farm in operation. What if you've got a family? Let's say you've got three kids. And they're divided about whether they want to stay in operation. A couple of them say want to get out. They need the cash, but in the third sibling wants to stay in operation. What happens there? What happens in that sort of scenario? They want to keep. The one wants to keep the farm in operation, but 2 siblings want to get out. What happens?
I think in that case, it's going to depend on how it's structured. So let's say the sibling that wants to keep in farming, in that situation, they're going to buy out the other 2 siblings. Let's say that's the scenario. Well, one way or another, we're going to have a tax. Those 2 siblings that want to get out, under current rules, they wouldn't have a tax because it's been stepped up. Under the Biden administration plan, either there's going to be a tax that was owed when the person passed away, or the tax is going to be owed when the siblings sell out. So the sibling that wants to continue farming, they're going to continue to defer that tax. But the other 2 siblings, they're going to incur the tax that under the current rules is not there. Under the new rules, it will be there. So yes, there'll definitely be a tax. And then if they didn't really go into, we think normally the capital gains tax, if it's owed at death, is a deduction against the estate. So your estate's going to go down. They didn't really mention estate taxes at all, but I think what I'm thinking is we already know that they want to possibly reduce the Medicare age. Well, if they drop that to 60 or 55, they're going to have to pay for it somehow. So I think that's when they're going to bring in the reduction in the estate tax exemption and some of these trust law changes, that let's say Bernie Sanders' 99.5% Act wants to place on trust, or even the step back. So I think a lot of the planning that estate attorneys and we as CPAs have done for the last 50 years, if any of these rules get passed, all that planning we've ever done is out the window. We're going to have to come up with new plans.
So you mentioned this earlier in this conversation, Paul, but it is early, and we've seen about 3 lines of an administrative proposal. If there's been legislative text submitted somewhere, I'll be honest with you, I missed it. I think we're still very early. So I guess my question for you is, what is your counsel to folks trying to figure out what to do about this and act on it? Do they act now before tax policy is put in place? Do they kind of sit on their hands and wait to see how it plays out? What's your counsel to your clients at this point?
I think our counsel is that we're discussing with our clients, you need to be ready to make major gifts now. We've hesitated to say automatically do it because the STEP Act, and that is actually an actual bill that's out there that was put out about a month ago, has a retroactive provision to January 1. So that concerned us. Now, it seems like what Biden is proposing, everything is going to be prospective. It's either going to be 2022 or it's going to be in effect after the bill is passed. So I think we want to make sure that people understand, hey, if you're worried about this, you need to be prepared to act. We don't necessarily want to act now, but you need to be prepared to act, and you got to be able to act very, very quickly. Now, the issue for us as CPAs and estate planners and appraisers is there's going to be a lot of work, and we don't have enough staff to get it all done. So, as people say a lot of times, every time we have a tax law changes, it's a CPA keep it in work, keep us in work, and that's definitely going to be true here.
So a good time to go into legislative tax interpretation as well as potentially into a career as a CPA is kind of what you're telling us there at the end. So we'll see if folks heed that career advice going forward. But obviously a lot of different things on the table right now, a lot of different things being proposed. You can learn more about some of these proposals in Phil's coverage at agripulse.com. But I think that's going to do it for our conversation here today. So Paul, thanks for joining us.
You're welcome. I enjoyed it.
For Paul Neiffer and Phil Brasher, I'm Spencer Chase. Have a good one.